Hi, come on in.
We are Concrete Lion Pictures. And you're watching Taking Stock.
Two minutes to go here until the closing bell on this, the fourth trading session of Q2. Welcome to the broadcast, one and all, on this Monday afternoon. You're watching Taking Stock, and I'm your host today, JD Durkin, down here on the trading floor of the New York Stock Exchange, just a few moments away, my friends, from the ringing of the iconic closing bell. The great Einstein of Wall Street, speaking of icons, he's on deck. The great Peter Tuchman will join us right after the bell for his take on today's tape, the road ahead for the Fed, and much more. Pretty interesting market correlations across the tape today. Oil is up, the VIX is up, the 10-year is up, and yet despite those unique pressure points, stocks are not down. Stocks are doing much of the same. The S&P 500 will finish up about 0.4%. Maybe this tells us the market in a bit of a transition phase with no clear narratives right now, but a lot of clear deadlines and timeline, a point of clarification investors are looking for as the conflict in the Middle East stretches beyond its sixth week. Discretionary, financials, and staples, those are your strongest performing sectors in the S&P 500 today. Your S&P laggards include materials, healthcare, as well as utilities. Bit of a mixed bag at this hour as we head into the closing tape for the Magnificent Seven tech stocks. A strong performance from Apple, up 1.3%. Shares of Tesla down more than 2.5%. We got the amazing team from the Barton School of Business from Wichita State University. They are down here on the trading floor of the New York Stock Exchange. They will also join us on the broadcast in just a bit, which will pick up after the bell. And on this Monday, April 6th, investors saying, what uncertainty? Let the good times roll. Your final tail of the tape, the S&P 500 in positive territory, 0.4%. The Dow 30 up, let's call it 0.4. The New York Stock Exchange Composite Index up about 0.3, and the small caps up 0.42%. Also catching a bid, the banks, defense, and aerospace stocks led by a strong session from Lockheed Martin. The fintech stocks led by Affirm, the home builders, and retail stocks with a strong tape as well, led by Deckers. Let's bring in the man himself, the Einstein of Wall Street, the institution inside the institution of the New York Stock Exchange. My man, thank you for being here today. It's nice to have you. So another day, listen, we ended Q1, the final day of Q1.
Correct.
Very strong.
Yes.
We started Q2 very strong, and here we are, the first Monday of Q2. Another strong tape. What are you seeing?
So I think there's fresh money coming into the market. Number one, people are actually realizing that this cannot go on forever. I don't think we got a lot of, I don't know. I mean, the press conference was a little bit disconcerting, just because I know there were sort of mixed narrative of basically we're ready to end this thing, but we're still one day away from blowing you up. So that's a bit disconcerting. But I think the market, people are ready to buy this market. Given any reason to buy the market at all, I think it's a little enthusiasm, fresh money coming in, the beginning of the month, a new quarter, and the fact is this is not going to go on forever, and we are going to see the end of it. Plenty of green on the screen. I'm impressed with it. I think it was a constructive day. That's the best I will say about it.
How do you approach the so-called ultimatums? Because right now the president is out there saying, 8 p.m. Eastern Standard Time on Tuesday night. If you by that point, if you don't yet open up the Strait of Hormuz, we'll take aggressive military action. But he gives us these timelines, and then the White House tends to change.
You know what? You don't trade it. You just sort of hold your ground and realize that one day does not make a market. That we're going to have these ups and these downs. If I'm interested in actually accumulating stock at these levels, we are basically down 4, 5, 6% across different sectors over the last 6 weeks. And so people are sort of feel like they don't want to miss this. That there is. Remember, if you remember February, March, and April last year, suddenly from one day to the next, after going down 20.8%, he said, you know what? Time to buy the market, and the market swept itself up in 4 weeks. We got back to even and went way higher. So I think people are starting to sort of itch away. They're getting itchy. They want to buy some stuff. So look, I think hopefully the worst is yet The worst is yet to come, no. I think the worst is behind us,
Yeah.
I hope. I don't think we're going to be able to turn back time on this one, though. You know, I think he's a little over his skis in a lot of different ways as far as how the effect of oil, on the price of oil. We are now sustaining oil above $110 for way too many days, and the impact on the economy is going to be significant, I think. You know, I mean, can we turn this all around? We've seen this a number of times with Mr. Trump, where he'll create a scenario and a sort of a catastrophe, and then he'll solve the catastrophe. It's a matter of when is that going to be. Are we getting closer to the solving of that? Right? We hope so. You know, are we going to wait till the midterms for that to happen? I don't know.
Sure.
But you know how this has worked. We've seen this movie before.
Yeah, and speaking of seeing movies before, you and I have talked about this many times over the years here, Peter Tuchman. Corporate earnings are in many ways the lifeblood of these markets.
100%.
But what happens in these weeks when we don't have a whole lot of corporate earnings? We have a little bit of Fed speak, some crucial inflation prints. Otherwise, I feel like the investor base in the United States is looking for their cues from the administration.
Yeah, 100%. Look, I think you're going to start seeing outlook. Well, we ended up seeing some of those bigger days, right, that we had at the end of the last quarter, those big days that we had were really not a function of Iran, I think. I think it was a rebalancing of a lot of these portfolios where people had seen that it's time to really start accumulating. They don't want, what happened last year was everybody got caught off guard and underinvested. We talked about it all last year, you and I, right? We were sitting here in June and July, and a lot of the big players, institutionals and funds, you know, had not jumped in time. They were sort of looking at the boogeyman was out there and they were afraid to buy stock. I think they're getting ahead of themselves now, just trying to get something under their belt so that, you know, at the end of the day, we're going to be ready once this, because when it turns, it's going to turn fast. I think that's my gut.
Yeah, more than a few learned lessons to go back to the Liberation Day lows, Monday, April 7th of last year.
When we were there, it looked really bad when we were in it. But when it was over, that's the thing about Mr. Trump. You have to read his body language. And when he's done, you know, watch out, because you're going to see it's going to be a mixture of massive short covering, because there obviously is a massive short position on this thing, because there are people who are betting that this is going to last for a while, especially the effects of oil on the economy and stuff like that. But at the end of the day, when it's ready to flip, it's going to flip. It'll be fast.
The man who makes me smarter than anyone else down here at the New York Stock Exchange, the great Peter Tuchman, the Einstein of Wall Street. Thanks for kicking us off as always.
Thanks, guys.
Jeremy, grab your mic. How about you and I head this way? We're bringing the latest analyst calls here on the day. Excuse me, fellas, what's going on, guys? Have a good time. All right, Goldman Sachs upgrading Netflix earlier this morning to buy from neutral, calling this an attractive risk-reward setup, boosting the price target to 120. Netflix already set to report next Thursday, the 16th. Not earnings really this week, but we get there before we know it. Next up, Bank of America downgrading Carvana to neutral this morning. They cite recent macro as well as industry developments. Shares of Carvana down about 25% so far in 2026. And finally, B of A reiterating Apple as a buy. They say, hey, we're bullish on the company's newly announced MacBook Neo. We call it a meaningful tailwind in their words. Apple stock down for the year. Still the best performing Magnificent 7 tech stock, however, on the year. In negative territory, but could be a lot worse. Howie, let's take a look at two NYSE notables. First up, the team from Boot Barn. Yeah, that's ticker symbol BOOT. It's up more than 10% off of Jefferies' upgrade to buy from hold, citing robust demand. The stock fell more than 30% between February and March, and that reset the valuation down to 16 times forward earnings. Attractive setup in the estimation of analysts at Jefferies. We'll pivot over this way. We'll talk about MDA Space as we're watching the latest out of Artemis 2. MDA up almost 7%. JP Morgan initiating coverage on the stock this morning with an overweight rating. This is the Canadian space tech company known for the famous Canada arm, that long robotic arm hanging off the side of the International Space Station. Yeah, this is the company that made it. Shares are up almost 50% since the start of 2026. Here at the New York Stock Exchange, I recently had the opportunity to sit down one-on-one with Jay Bavisi of EC Council. We talked about AI adoption, the state of regulation in both the U.S. and the U.K., and much more. Take a look now at part two of our conversation. Jay Bavisi joins me now here at the trading floor of the New York Stock Exchange. He is the CEO and Group President of EC Council. Nice to see you again. We met last week at RSAC in San Francisco. You decided to come back for more. Good to have you.
Thank you, JD. Glad to be here.
Talk to me more about the governance side, especially for Wall Street, these publicly traded companies. We've got a lot of cybersecurity companies, of course, that call the New York Stock Exchange home, but countless other tech companies, whether you're a manufacturing company, you work in the real estate space, you have exposure to the cybersecurity threats and opportunities, and also the ways that a lot of these so-called bad guys, the threat actors out there, are leveraging a lot of the same technology. As you sit here, you overlook the trading floor of the big board here. What comes to mind for you in terms of where EC Council is positioned?
Sure. So let me just tell you that if you look at the 10K filings of NYSE listed companies or Fortune 100, 84% of them actually mentioned that we're thinking of, we're using artificial intelligence, we're implementing artificial intelligence, whatever. It's good for the user perspective, it's good for stockholder value, it's good for your stock price, it's good for many reasons whatsoever. However, only 18% of them actually have governance framework in place. So just think about that. Out of 5 companies that talk AI, right, only 1/5 of them can walk the talk, right? Because there is a massive shortage of cybersecurity professionals that are trained in AI, whether we talk about adoption of AI, testing of AI, or defense of AI, or governance of AI. So I think that's one of the largest risks, and the use of responsible AI. See, AI systems are opaque. When you put something into AI, it's going in the Wild West. You don't know where your data is going to go. So there has to be a real responsible use of AI conversation organizations and governance frameworks that are implemented. And JD, let me tell you something. Right now, the NYSE does not mandate any kind of a compliance to ISO 42001. That's a compliance a framework, right, for AI. But it's coming because 72 countries around the world are having regulations requiring companies to adhere to certain standards. So like ISO 42001 is a standard for AI. This is happening. NYSE companies are doing business in Europe. You have to comply to EU AI Act. What about doing business in the rest of Asia or Middle East or anywhere else in the world? So there's a massive amount of regulations and governance that's about to come in this area. And they have to stock up with the talent and the capability to be able to get there.
Since you mentioned the United Kingdom, when we talk about the big tech companies, the Mag 7s, the Metas, the Microsofts, et cetera, one of the big storylines for many years has been how much more difficult, for good or for bad, the regulatory environment is in the UK versus the United States. Do you see the same reality play itself out in your lane right now?
Look, yeah, it is. Regulations are regulations. Regulations are going to happen, and they're going to happen all over the world. It's just, shall we say, a risk of, a cost of big business.
Nice.
It's just going to be there. But organizations need to be prepared. They need to understand that these standards are coming, and it's better for you to implement your governance frameworks before you are required to. Right? I mean, have an umbrella ready before it rains. That's probably a good idea.
Yeah. Defenders. First of all, you could consider them students of EC Council?
Well, defenders.
People who go through the process?
All cyber defenders, yeah.
What is the background that makes for the best, either the best type of student or the average background you're seeing for people who want to learn more and come to your programs?
An inquisitive mind.
Inquisitive mind.
Because those that are really keen to absorb knowledge, they're really inquisitive about how things work and how things are broken, are the ones that can actually do the best job in defense. But directly speaking, the IT folks, right? I mean, there's a lot of talk about AI eating my job. And yeah, that's partly true. AI can do a lot of rudimentary jobs, but there are a lot of jobs that are going to be created. Cybersecurity is one of them, right? Because there's an entire field of professionals that are required to fill in the governance frameworks, the cyber defense, and the implementation of AI. So the IT folks that are sitting down right now, staring at a screen, looking at the networks, and they're looking at a career change, this is a phenomenal time for them to take a look at the certifications that EC Council offers to build you into a capable program manager or AI, or a certified offensive security professional where you're able to hack AI, or a governance and a risk framework professional where you're able to implement AI securely and governance frameworks in organizations.
If you were advising a CEO or a CISO, what is one cyber capability every company needs right now?
One cyber capability that everyone needs is to know there is not one, right? There isn't a one size that fits all. There isn't a one Kool-Aid that you can drink. Yeah. Cybersecurity is just like medicine, right? There's a specialization of oncology, there are pediatrics, right? You got to figure out which are the most vulnerable spots in your organization and what you really require. So CEOs, and you know what, Jay? These are CEO-led. When CEO asks these questions, that's when you get a better organization. You need to have an organizational memory in your organization.
Jay, really nice to welcome you down here to the New York Stock Exchange. Thanks for coming to see us.
Thank you, JD. Glad to be here.
Come back to New York anytime.
Thank you, sir.
Welcome back to the show. You're watching Taking Stock on this Monday edition down here from the trading floor of the New York Stock Exchange. Time for it, as always, one of my favorite interviews. Not just an incredible interview with two awesome guests, but just coming off the Bell podium. Please say hello to Larissa Jenin. She is the Dean of Wichita State University's Barton School of Business, and Ellie Stringer, a student at the aforementioned Barton School. Great to have both of you here, and congratulations.
Thank you.
Larissa, I'm going to kick things off with you. You're here to celebrate 100 years of business excellence at Wichita State University. What does this moment being here at the New York Stock Exchange mean about the school's presence on a national stage?
Well, we're honored to be here representing Wichita State University, and that's the only public urban research university. We're based in Wichita, Kansas, and we are celebrating 100 years of business excellence as part of the Barton School of Business, and we're grateful to our university for all the support, inspiration, and guidance. And I must say, we're known for student-centered, innovation-driven focus, and we just unveiled our president, Rick Muma's book, Student-Centered, Innovation-Driven, and the transformation that we've gone through. So the last 100 years look very remarkable. The next 100 years are going to be spectacular.
Oh, that's really cool, and thanks for bringing the book. Ellie, I got to ask you about your students' perspective, not just what it's like to be here at the Stock Exchange, but why did you choose Barton in terms of your education, and in what ways do you most feel it's different? How is it separate from more of a traditional business program?
Absolutely. I love being a student at Wichita State University, especially, in the Barton School of Business. My favorite applied learning aspect has really been our Cummings Student Managed Investment Fund. There are many investment funds across the nation, but I feel like what we really do different is create that more student-centered aspect. It's not faculty run. All of the power of decision making is in the student hands, and I really think that's been helping us learn.
Could you talk to us a little bit about your curriculum? Because those of us that cover financial media every day, at some point we've learned this stuff, but what does a modern curriculum for the Barton School of Business actually look like for a student like yourself?
Yeah, absolutely. I think a really important aspect of our curriculum is our business core. For the first couple of years of our business degrees, we have to take a number of different subjects kind of spanning our entire offering of majors. So it kind of gives you a good sense of what you want to do actually instead of what you think you want to do going into college.
That's awesome. And Dr. Jenin, WSU is known for applied learning, like Ellie just said. How does that actually translate into real life outcomes for your students?
Well, Wichita State University is the leader in applied learning, and we have over 12,000, close to 13,000 applied learning experiences that our students have gone through, and they earned close to 40 million. So we are really all about access, affordability, and creating opportunities for students beyond the classroom, and really unlocking their potential and setting them for meaningful careers. And focusing on contributing to Wichita's economic prosperity and creating the talent pipeline.
That's amazing. Larissa Jenin, congratulations.
Thank
and Ellie
you.
Stringer, huge congratulations to you. When you graduate, please come back and see us down here on the trading floor of the New York Stock Exchange. Really nice to have both of you. Don't go anywhere. A whole lot more Taking Stock coming up right after this.
And that's for you.
Thank you. All right, let's rock and roll and welcome in our third guest here to Taking Stock. This is Rick Horrow. He is the CEO of Horrow Sports Ventures, joining us via Zoom. Rick, it's really nice to have you join us on this Monday afternoon. You've done a lot of deals at the intersection of sports and venture capital. Talk to me first and foremost about a few of the top trends that you are seeing in that landscape today.
Well, the first landscape issue is how do we deal with the war and how do we deal with the uncertainty? You know, there is $2.6 trillion invested in the sports business. At the end of the day, it has increased double over time. It's one of the most exciting and most protected area of business, specifically in the Middle East. When you think about it, you have a growing market of about 9%. Saudi Arabia hosting the 2034 World Cup. Qatar has a business called BN Sports with 43% for countries, as well as the infrastructure. So this is a good example of a strategy that basically transcends some of the horrendous stuff that is happening in the Middle East now. And it's growing effectively because of sports infrastructure.
Qatar, of course, has also previously hosted the World Cup, to your point. Has confidence in the region become shaky since the start of the conflict involving Iran, Israel, and throughout the Middle East? And if so, what most needs to be done right now to encourage further confidence in the region?
Well, confidence means stability and it means economic impact. When you think about it, the Saudis have invested billions in planning for 2034. They're planning live golf investments, Formula One, WWE. On the UAE side, obviously, they put $15 billion into sports infrastructure as well. Dubai has 20 million visitors overnight, as well as the hotel bookings. They got to preserve their infrastructure. And as far as Qatar is concerned, the Doha World Cup was a rousing success. They spent $220 billion in World Cup infrastructure. And even though, as you asked, in the future, there are issues of uncertainty, you've got the World Cup hosting rights for Qatar, you've got Abu Dhabi Grand Prix, you've got the PIF sports portfolio for Saudi Arabia, you've got the stake in Monumental Sports that Qatar bought, a 5% stake in an American company. And you also have a long-term sports strategy plan. The point is that you have infrastructure and media rights that transcend momentary disruption, as bad as that disruption is.
All right, Rick Horrow, CEO of Horrow Sports Ventures. Perhaps we get much more clarity on that expected timeline from the president tomorrow night. We'll have you back. Open invitation to join the show. Rick, thank you very much. Time now at this hour for the latest headlines in the world of startups, raises, and rounds for your Monday afternoon. First up, credit startup 9fin raising $170 million at a $1.3 billion valuation. This coming as demand grows for its AI-driven platform, helping traders and investors navigate debt markets more efficiently. Next up, Impulse Space and Anduril partnering with the Pentagon to develop interceptors for President Donald Trump's so-called Golden Dome initiative. It's an ambitious project critics say may be too costly and technologically unproven. And finally, for your Monday afternoon, drone startup Mithril Defense rolling out high-speed security drones for U.S. high schools, promising faster response to real-time emergencies, but some question if the money would be better spent elsewhere. We'll take a quick break here on Taking Stock and back with a whole lot more live show from the New York Stock Exchange after this.
just go straight back.
Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence headlines. First up, the crypto majors all trending in positive territory. Bitcoin holding on to 69,871 at this hour. Next up, Polymarket admitted it violated its own integrity standards, removing an event contract that allowed users to bet on the rescue of downed U.S. service members in Iran after sharp criticism from lawmakers in Washington. And finally, the IMF warning that Wall Street's shift to blockchain-based tokenized trading could make financial crises hit faster as banks and exchanges push ahead with plans to modernize the world of markets. Money 2020's very own Scarlett Sieber is now back with a whole new edition of Jargon Translator, where she puts complicated fintech terminology into day-to-day language that anyone, even me, can better understand. Take a look.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Jargon Translator, where we make sense of the techie terms that keep popping up in your crypto feed. Today's word, layer 2. Sounds like a skincare routine, and I love me a skincare routine, but it's actually how blockchains level up. So here's the tea. Blockchains like Ethereum are amazing, but they're slow and expensive when traffic spikes. Enter layer 2 solutions. Think of layer 2 as the express lane on a crowded highway. Instead of every car or transactions jamming the main road, layer 2 handles the overflow, processes transactions off-chain, and then settles them back on the main blockchain. It's like saying, hey Ethereum, you keep being the backbone, we'll handle the chaos. Why does this matter? Because gas fees on Ethereum can feel like rent in Manhattan. Layer 2 solutions slash those costs and speed things up. Suddenly, buying an NFT doesn't require a second mortgage, and people have done it. Go ahead and check me. How does this work? There are different flavors. Roll-ups, they bundle transactions together and post them to Ethereum in one neat package. Think Costco for crypto transactions. State channels, like opening a private tab with your friend for multiple transactions, then settling the bill later. Sidechains, independent blockchains that connect back to Ethereum for security reasons. And here is the kicker. Layer 2 isn't just about saving money, it's about making decentralized apps usable at scale. Gaming, DeFi, NFTs, they all need speed and affordability to really go mainstream. That's the biggest criticism right now. Without layer 2, Ethereum would be stuck in traffic forever, and we all hate those traffic jams. Of course, it is not perfect, nothing is perfect. Security depends on how well these solutions interact with layer 1. Bugs, exploits, and bridge hacks, still a thing, but the innovation is wild and billions are flowing into layer 2 projects because everyone knows scalability is the name of the game and the name of longevity. So next time you hear layer 2, don't think skincare, think blockchain's glow up moment. Layer 2, because even blockchains need a fast pass to keep the vibes moving. And that is your jargon translated.
Tomorrow morning on Tuesday at 8:30 a.m., we'll get the latest reading for the month of February's durable good orders. We also have a handful of voting FOMC members who are set to make remarks that include Austin Goolsbee and Vice Chair Philip Jefferson. That's going to do it for today's edition of Taking Stock live from the New York Stock Exchange. Have a great Monday night. We'll see you here again tomorrow.